Good afternoon. I'm Hui Yi, Chief Strategy Officer of Global Fintech Institute, and I'm your moderator today. Across financial services, AI has moved from experimentation to infrastructure. It's now shaping decisions, customer journeys, compliance processes, and even the way institutions think about risk and resilience. With this momentum comes a hard reality we cannot ignore. Innovation in AI is accelerating faster than frameworks meant to govern it. And in a sector built on trust, that tension is becoming one of the defining challenges of our time. Today's discussion focuses on that intersection where ambition meets accountability, not in theory, but in the practical choices leaders must make. How we build, how we scale, and how we safeguard the systems we increasingly rely on. With that, let's begin. When we talk about responsible AI, it often means different things to different people. To set the stage, I would like each of you to briefly share your thoughts on what responsible AI means. Let's start with Dr. Brinda.
Thanks, Hui. That's an important question today. So I think today there is no AI without being responsible, right? So responsible AI is about building trust via design. So in the past, we would just develop POCs and try to launch them into production, but that's not relevant anymore. So bringing in your trust principles within your design principles is what we are looking at as responsible AI in this day and age.
How about you, Professor Lee?
Yeah, thanks. So when we talk about responsible AI, we will start thinking about ethics or regulation. But to me, I think AI begins much earlier at the design stage, because every AI system is a function of the hardware that they use, is the software, which is the algorithm, and the data that they use. If any of these foundations are actually brittle, misaligned, or biased, then the outcome will definitely reflect those flaws and maybe exaggerated. So design is not technical. It must be human-centric as well. So this is where social sciences, ethics, and governance come in. They help us to embed the questions of dignity, fairness, and inclusion directly into the architecture. Who is the system serving? Who might be left out? What values must shape it? And that leads to a broader idea that peace in creation, when you create, you feel peace, and creation in peace, whether you bring peace or not. And the responsible AI is not about building faster and fixing later, which is what we are doing now. It is about designing systems that reduce harm, build trust, and create social stability from the very beginning. And this is extremely difficult in a dog-eat-dog world, winner takes all. So for me, responsible AI is both engineering and humanity, building hardware, software, data, and governance frameworks that put human beings at the center and ensure that AI we create contributes to peace rather than disruption.
Thank you, Prof. Lee. So your human-centric point is very on point, and I totally agree with that. How about you, Ian?
Yeah, I guess I'm on the panel to speak more on the innovation side because I'm outshadowed by the responsible AI aspect of this. Just to give everyone some context, AI Lab for Prudential that I'm heading up, we are kind of more like the experimentational innovation arm, right, of where we sit for Asia and Africa across the 26 markets that we have in Prudential. And I do have counterparts, which is the AI Center of Excellence that we work closely with, right? I think thanks, Prof, for that way to kind of enter into the innovation space. One of the bigger challenges that we do as we go into innovating in AI, right, as we look at experimenting, bringing new AI solutions back to the organization is then how do we balance that aspect of responsibility as well as innovation. It will be great to put into the hands of all our employees, which, can I share that? Which will be kind of the way forward for the organization as a whole if we put ability to create agentic agents for everyone, right? So every employee can be empowered to create their own agentic agents, but at the same time, balancing that with the ability to govern these agents, because if agents rubbish in, rubbish out, stacks on rubbish, then you get a multifold of many agentic agents building more and more stuff that doesn't make sense. So in the fintech space, in the insurance space, I think that speaks to a need, or a very strong need, to ensure that whatever we use and leverage AI on makes sense and is accurate and serves our customers well. Yeah.
Okay, on balancing.
Just a quick response to that. I think, especially in the insurance industry, you really need innovation. But I think what we are talking about here is that how do we innovate within a certain parameters that when the cost benefits will not have the cost outweigh the benefits. But I don't think that applies to insurance, because insurance is way behind.
It's a blue ocean.
On balancing trust and innovation, Prof. Lee, you have long advocated that financial innovation must remain inclusive and accessible. However, modern Gen AI is capital intensive. Are we creating a future where only the tech giants survive? And what does that mean for inclusive fintech?
Okay, so let me take into my notes again, just in case I forget. Thank you. I think we have to be honest. Modern AI is structurally winner takes all. It rewards scale, capital, and computing power, and that creates a zero-sum dynamic at the producer level. And in fact, it drains away a lot of cash flow. It doesn't generate a lot of cash flow when you're at the very foundation level. So regulation alone cannot solve this. We need a counter technology to rebalance the system. That's where innovation comes in. And that's where distributed technology like blockchain comes in. How do you know your software have not been tampered with? How do you know that whatever algorithm they're using is not what you think it is? So that's first. Second, we are entering an AI to AI world. It's not more B2B, C2C, B2C. It's about A to A. Much of that happens at the background, no longer be visible to humans. If you want inclusion, we must design mechanisms where the benefits of AI flow to the society, not just to capital owners. A self-driving car, for example, should not only enrich the platform, but also the driver's family as a basic. So that every family who's the driver's family should also get a self-driving car to generate income. So that's the basic AI income requirement. Technology must enable common prosperity, not concentrated wealth. So third, inclusion is not about simply access. It must be positive inclusion, not for the inclusion for addiction, not inclusion for scams, not inclusion for deepfakes. No point getting everybody onto digital world and they get scammed, get addiction for gambling online and so on. So privacy protection and data security become prerequisite. And that can only be achieved through decentralized architecture, like Web3, where users actually own their data and identity. And we can monitor every software that are being used 24/7, which is what the previous panel talking about, AI monitoring AI. But AI monitoring AI is not enough. You need blockchain to ensure there's accountability, there's transparency, there's immutability. Finally, inclusion is not just about individuals. It is about corporate inclusion as well. AI's winner-takes-all dynamics will create market failures if SMEs cannot participate. Web3 provides a counterweight by enabling distributed ownership, open networks, and shared digital infrastructure where every node can contribute. Everybody is a bank, everybody is an exchange, everybody will be able to contribute with regulation and also with guided principles. So this leads to Web 4, the Gulf convergence layer where AI, blockchain, cloud, data, and green technology reinforce each other. Without this second technology stack, inclusion will fail. But with it, we can build a financial ecosystem where innovation scales and prosperity is shared.
Thank you, Prof. David. Inclusive and innovative fintech often includes ethical AI as a concept. So, Dr. Brinda, please share with us how businesses could balance the drive for profit against the nebulous concept of AI ethics.
I think traditionally, we all are aware of this, that more than 80% of the projects remain in POC stage. They hardly reach the production stage, even with traditional AI. So now with the agentic AI and Gen AI, seeping into every market, unless you bring in the governance and the ethical aspect right from the start, innovation will again fail if you don't really bring in the guardrails in place right from the start. So it's not a separate entity, innovation without responsible AI and trust by design. So it's essential that you define your fairness metrics, inclusivity, the privacy, data preserving techniques, and also the drift monitoring. Because as these agents start to interact with other agents, you need to monitor them and look at the lineage and the explainability part of why the decisions are being made. So we are heading into a very autonomous world. So we must have the guardrails in place. The earlier we do it, we can innovate faster. So they are not two different entities.
Okay, Dr. Brinda noted that projects often don't make it to successful tools that work. So Ian, there's often a large gap between a successful pilot and a tool that works effectively at scale. What's the biggest hurdle in the scaling up process?
Yeah, so great and fair point, and I think we see that not just in fintech or the industry as a whole, MNCs as a whole. I think McKinsey came out with a report saying that most will stay in a POC graveyard. For ourselves, well, I can only speak to what I do, right? So for myself, I report to our Chief Data and AI Officer of the group. So that's kind of 2 levels down from our group CEO. Alongside my boss's focus, which is to take products or AI solutions live under the AI Center of Excellence, there is then a need for very clear handover or ways to ensure that POCs or pilots that succeed actually goes into deployment and scale, right? So when we build that in mind from an AI lab perspective, I think where we're also starting to consider or explore is that we don't look at maybe bringing in AI working governance groups or ensuring that it's responsible, ethical AI only at the deployment stage. And we are hiring more AI governance officers to look at stages from ideation all the way to a POC MVP, and not that entire onerous process of maybe 100 questions that you have to fill up, huge amount of testing, getting independent assessors at the deployment stage. But can we start doing some model testing from the beginning of this process alongside the AI lab as we are building MVPs, POCs, and also ensure that there is some level of centralized model testing that we can deploy for the entire group, because we do have different markets that serve different purposes, different needs. PII details or data protection differs from country to country, right? And that's huge for a finance institution. So, yeah.
Okay, following up on that POC and deployment challenge, let's talk about people and culture. I would like to ask Ian, what is your perspective on the cultural aspect of the shift to AI playing an increasingly larger role in the workplace? How do you bridge the psychological gap so that a human user feels empowered rather than threatened by AI?
Great question. I'm actually not been very long in Prudential. AI Lab has only been commissioned a year ago, so I joined to head it up, build the team to where we are today. Prior to that, I've only had 3 years of experience in the corporate space. So I came from the startup space, and I think that idea that has been inculcated in many organizations, right, where innovation became a key transformation effort, which is, how do we ensure that, failures are tolerated, that we can take some of these great ideas to life, but at the same time ensuring guardrails, right? I think Dr. was also sharing that, if we ensure guardrails are placed at the right stages, then we evaluate it properly, And at that point in time, if we decide that either one, maybe cost doesn't make sense, maybe the technology don't make sense, maybe the solution don't make sense, maybe it's not ethical or responsible, then we need to be able to say, let's not proceed with this, right? So as part of our governance within the AI lab in Prudential, is really, at every stage, we can make a go or no-go decision. And that's not just the business, not just us, but also includes group, also includes the working governance from an AI perspective to ensure that the process and guardrails are in place. And that if we fail, my KPI is not 100% to pilot, right? So that allows me to tell my team, you know what, let's not spend our time on this if this is not going to go live. Yeah, so far I'm hitting above my KPI, so that's why we're growing.
And I've also heard that you have around 20 to 25 software engineers at AI Prudential Labs.
Yeah. So we have dedicated AI and data engineers within our team and data scientists as well. And that works alongside our program team, right, which looks at translating some of these business needs into actual solutions. And we are building a governance team just specifically from ideation to a pilot stage to ensure there is a good succession of deployment and scaling with the Center of Excellence.
Okay, with that, I would like to bring the topic to Dr. Brinda. So currently, banks and financial institutions sit on decades of historical data. We know that this data reflects the biases of the past. How do we train forward-looking fair models on backward-looking legacy data without inadvertently teaching the AI to repeat the discrimination or biases of the past?
Yeah, that's a real problem. So with the data, you definitely have the bias that creep in with it. And with the historical decision making that the humans have performed also comes with certain bias. So what is essentially what we do is like a 4-step process. We kind of identify the biased data through mechanisms. So it's important to initially identify where the data is biased towards, and then synthetically add in and enrich your data, so that you can ensure there is normancy and distribution across various segments or various gender and all the different criterias. So post that, you will have to have fairness monitoring metrics and models and algorithms that incorporate fairness also into the training process. So these days, the traditional algorithms come with fairness aware metrics and monitoring process. And with that, you will have to have human in the loop. So there is no way we can be away without humans and totally automate it right from the start. You should have human in the loop to also verify those critical decisions, especially in finance. Most of our applications imply the customers and impact the customers quite a bit. So having human in the loop ends this entire 4-step process. Yeah.
With humans in the loop, Prof. David Lee, you often argue that you can't effectively govern a technology you cannot fundamentally understand. Do we currently have a crisis of competency in corporate governance? Is it realistic to expect non-technical bots to effectively manage the risk of generative AI? Or do we need a fundamental change in who sits at the table?
I think it's extremely difficult for the board of directors because the speed at which the technology innovation is so fast that it's very difficult for anyone who's even in the area to catch up. So I think there is a mini crisis in that you need also people in the board, but technology expertise is one that is very difficult. And in finance, at least in Singapore, we need to have a technology risk management committee. And everybody's just searching, looking after each other and say, where are we heading? Because everything is moving so fast. And if you look at, there are a few areas that I think that we can focus on, right? The first one is probably the degree of delegation to AI. How much do you want to delegate decision to AI? I think that is very important. Because as a board of directors, you have to decide if I have a financial analyst, which is an AI agent, to do all the analysis and then pass on the results to my AI agent number 2 that do asset allocation, and then pass on the result to my AI agent 3 that execute directly with SGX, with Binance, with everything. So we need to know how much are we delegating the decision to AI as the board? Because decision making is important. What is material? What is material to the board? And do we know what AI is doing? Do we have the control over the AI? What if it goes wrong? What if it goes through the systematic risk? That's one. Secondly is the risk of the AI product they're using. Do you know how much risk is in the hardware? Do you know how much risk is in the algorithm, the software? Do you know how much risk is in the data that you're using? Again, the board of directors have to understand that. So you need to have a risk and complexity classification for the AI products they're using, which at the moment we don't have that. How much risk are we dealing with at the board? We're using this AI. Can you tell me as a technology risk management committee? You probably can't tell that to the board. So that's the second point that in my notes. And I think there are a lot more other issues that we need to look at the board level, which is that you have to worry about how many people you're going to deploy. You have to assure your staff that AI is only used to empower human and not to replace human. Then you have to answer the question, right? If the company is all doing AI, who are being replaced? And those that replace, can we redeploy them? So you need to have a culture where whenever you design something, the AI that you use, how do you deploy? For example, in GFI, we are going to be 95% using AI, but we are not going to replace any of the staff. Because the whole idea is that the staff themselves need to come up with new KPIs. How do you do that? That's something the board of directors need to think about. There are many more things that the board of directors need to think about, but they're all technology related, so it is going to be very, very difficult, and therefore, at GFI, we will try to see how we can train the directors to understand what are the key components, what are the essential elements that you need to understand in order to perform your duty as a director. Because without those technology knowledge, it is going to be very, very difficult. And this is the reason why, and this is the KPI and the duty of Global Fintech Institute.
Okay, so now we have come to the issue of the black box dilemma, the tension between accuracy and explainability. This next question is addressed to all panelists. Where does the industry draw the line between accuracy and explainability? Are there contexts where we will accept a black box as long as it delivers better results for the customer, or is explainability a non-negotiable red line? Let's start with Dr. Brinda.
Yeah, that's a good question. So in the finance space, explainability is not a good to have, it's a must-have capability of every AI system that is being deployed. But having said that, we do perform materiality assessment to assess the system and classify them as low, medium, and high. And based on the materiality assessment and the risk appetite of that domain, we can go and create the explainability module in the way that we want. For example, if it's an agentic AI that is being deployed, we are looking at decision-making and explainable decision-making across the various agents. So the depth of the explainability differs from application to application. However, explainability is a must-have feature, I would say, in the finance space.
Prof. David?
Yeah, I think at the moment, once we move from the traditional discriminatory AI or classical AI to generative AI, we are moving from deterministic to probabilistic. And once you move to probabilistic, a lot of things are black box. And that's where the problem comes in. And that's not only the only problem. It's an evolving system. And if you look at GAN, right, you have the GAN model, which one AI actually trained with another AI, and they will definitely be smarter, stronger, faster than any human, beyond our comprehension. So I think those are the issues that we need to grapple with. And at the same time, in finance, we have to bear in mind the FEED principle of fairness, equitable, accountable, transparent. So if it's a black box as something that is evolving, something that will hide from you that have another copy that on another computer in a network that we may never find out. It's going to be a very difficult job for us. And this is the reason why I say we have to go back to the design at the hardware stage, the design at the software stage, the design at the data usage. Because all this probabilistic AI model that can evolve will exaggerate all the sinfulness in the data. And they will do it faster, better. And they are perfect tools for scammers. So your mother is not your mother, your daughter is not your daughter. And how do we deal with that? So this is where I think you need another technology, a lot of other technology to curb the AI. And this is where I talk about Web3, Web4. We really need to spend more time understanding cryptocurrency. We really need to understand more about Bitcoin. Because the cypherpunk philosophy is about data privacy and data protection and data security and privacy protection. And the crux about the virtual world is about data security and privacy protection because we are in a trustless world. Trust is worth a lot more. And in a black box world, how do we create trust in a black box world? That's the question we need to answer.
I think that brings us to the topic of community as well. So that's also what we are doing at GFI. We are trying to build a community of certified chartered fintech professionals. So I would also like to ask Ian, what are your thoughts?
Yeah, maybe more on a more thought-provoking front, right? And I don't.
He is not so DeFi.
I don't debate the points that have came out, but I think this is not the first time we see change, right? When you start having organizations and you start hiring employees, right? And I'm sure senior leaders here, you all have quite a number of people under you. Are you really able to also understand and how your employees are thinking and give explainability to the way that they act, right? I think that's the first shift, right? And then we started doing to the internet, right? Then they're gonna be fake news, they're gonna be wrong information, and then we need to source and we need to sort them out. And then we use the tools like Excel on a day-to-day basis. And I use equals, I don't know, right? Certain formulas that I use in my Excel. Honestly, I don't question the Excel formulas in there, but it is deterministic, right? And we assume that Microsoft got it right? So there's a certain level of trust that we put on the technology itself, right? And then it comes to now where deterministic AI becomes more generative. Then it comes to the whole black box of how accurate it is, right? And then we can run it through standardized testing. So Google with Gemini now with medical capabilities, previously MedLM that we also leverage on for Prudential. They did standardized testing for Gemini with medical professionals examination, and they found it to be about 80% of doctors in US. So then, can I say that it is actually as good as 80% of doctors? So that's a very dangerous statement to make because it is not deterministic and we don't understand. But at the same time, if you run all 100% of doctors through the same test again, they don't necessarily get the same results anyway. So it's quite interesting because insurance is about risk, right? We evaluate, we price, we sell. Our product itself is risk, right? So for us, it's really understanding what that risk is. And I don't, for certain, can say that anybody does understand that now. But even when I hire a new team member, there is a risk. Then how you attribute risk, how do you then decide whether to take that risk or not? I think it's a very corporate decision, and then that builds on the trust on the customers have on us to uphold that trust. So
maybe I jump in here. I think there are two very important points at what's happening in the world now. Never in the history, the first one, never in the history of the human race, we have created something better than human. That's something that we need to know, right? For the first time, we always are in control. All the animals, all the plants, they are always under the human control. This is the first time in history we have created AI that think faster, act faster. Everything is much better than a human. We have created something that is better than all of us. So that's first point that we need to know.
I think, Prof, debatable at this stage. I can't say it's better, but that's it. The internet was better at sourcing, right? It was better at consolidating information too. So, and then you can say that chat platforms or like Reddit is better at creating communities, right? So I don't know if it's better than humans now, but
Yeah, maybe I'm just jumping the gun, but you're right.
That's the hope.
So that's the first thing that I believe. We have created something better than human, okay? Stronger than us. That day will come. Maybe not today, maybe 5 years' time, maybe 10 years' time, when everybody has a robot at home, everybody has a Tesla car at home, and if it's centralized, I can navigate all to the building here. That's first thing that is good. Second thing is that we used to have a lot of trusted third party, right? In the physical world, if anyone misbehave, the security will here taking you away because there's a trusted third party. On the internet, we have Web 2, which is trusted third party. There is always a certifying agency and so on. But now, we know that we may not have a trusted third party. We don't even know who created the software. We can't even license that. The software is not a legal entity at this moment. Anyone can create a software, and this software can run havoc, and that we are not in control. So based on these two premise, rightly or wrongly, we need to be cautious. And that's my point is, I may be wrong, and I hope that you're right and we don't have to deal with this. But I think there are many people who are signing that we have to be, a lot of AI experts who are advocating that we have to be very careful in 5 years, 10 years, maybe 20 years time, but certainly during my lifetime, that we need to be careful and A to A, not B to B. When AI is dealing with AI and we don't know what's happening. So that's my point. I hope really I'm wrong. Yeah.
Thank you, Prof. Lee. So governance and guardrails are very important when we actually put in data training to the AI. So looking forward at compliance trends, let's look at the regulators. How do you see the role of regulators of fintech changing over the next 3 years, Prof. Lee?
Regulator has a very, very difficult job because once you go into a distributed network, borderless, once you go into virtual world, because we are developing a twin economy, because the physical economy has grown to a level, it's extremely difficult to grow. We need a twin economy. And with that, regulators has to cross ministry. So if you are monetary regulators, you have to cross into communication, you have to cross into logistics, because AI is everywhere, blockchain is everywhere, stable coins is everywhere, it's borderless, it's liquid, it's open, it's online, as in multi-currency, which is what Singapore talk about, Bloom, B-L-O-O-M. That will create a lot of difficulties for regulators, and therefore, I think US will be leading this, because they have the AI, they have a blockchain, CISA, they have a sort of a president that can push along with this, because you really need to push for international, and I think regulators face a lot of challenge at this moment.
Just adding on, I think it's a challenging time for the regulators because technology is moving faster than we thought. And with Gen AI in the hands of even children, it's a very tender age to even access technology at that point in time and use it in a way that they shouldn't be using. So a few changes that might come going forward would be, while they catch up to the technological advancements, they would also go more towards evidence-based compliance, which today is more of policies and checklist, and once you hit the checklist, you're kind of good to go. But in the future, it would be more of evidence-based, where they're looking at fairness metrics and evidence for bias and, discrimination, fairness, the way it's being used. And also, it will steer towards algorithmic audits, which today is more of general finance kind of audits. But with the various Gen AI archetypes, the types of Gen AI that are in the market, they will steer towards auditing them individually and in a separate manner, because each one requires different kind of guardrails and compliance to be met. And the third would be like AI to help in this function, because it's very difficult to scale with just humans. So definitely they need to leverage AI to be able to check if the systems are compliant and make the best use of AI to scale as the technology advances.
Hi, Ian.
Yeah, I mean, at the end of the day, right, this progression, as I was kind of sharing, is not relatively new, right? So regulators will generally come in a little bit slower because it is what it is, right? I pertain to about more than 20 different markets, which means 20 different regulators. And every regulator has their own practices, their own requirements. They generally take to some level of international standards that they follow. So be it EU or US, for example. I think at the end of the day, the trust that the customers put is on the organization, right? And organization then also kind of pertains and reports back to the regulatory body because it needs to be ensured or somewhat audited and assessed. But the responsibility for us as an organization lies with the trust in the customer, between the customer and the organization, be it UOB, be it Prudential. When I put my money in UOB, I assumed it is there, right? And then regulators make sure that there is a percentage that is there, and then SDLC protects a specific amount of that money. I think that will be applied to all eventually, be it generative AI, autonomous robots. You're going to see robo-cops walking the streets, right? And then that will be regulated by somebody. I think that the point that I was trying to get across was that as much as we as organizations need to fulfill regulatory practices, there is a higher standard that we have to stick to and help to build to ensure that our trust of our customers is not lost in us, because ultimately we're still business, right? When everything moved to cloud happened, hackers happened, cybersecurity happened, right? And cybersecurity in itself is not regulated, and no regulatory body says you need to have a cybersecurity team of this size, right? But they say you need to ensure this stuff is not lost, it's not leaked, right? So I think that will be similar in how we govern our own internal AI solutions and tools in our use to help our customers that does not lose their trust in us whilst adhering to regulatory practices and compliance, which will take a bit longer to come up, to catch up to speed, right? And hope that we are ahead of it and not just following behind it. Yeah.
Thank you for the depth and clarity of your insights. What's clear is that innovation and responsibility can no longer be treated as separate tracks. They must evolve together. For AI to scale across financial services, institutions will need stronger governance foundations, deeper technical competency, and cultures that enable safe experimentation rather than fear it. Thank you for everyone for coming, and the NEX for hosting. Enjoy the rest of the conference.